Congratulations on your new role. Welcome to the course in the first 90 days of the corporate controller. This course is designed to help you quickly get up to speed and make a positive impact in your first 90 days in this role. This course is split into 5 parts. These are 1. About the company, 2. Financial overview, 3. Internal controls, 4. Financial operations, and 5. Accounting team. Let's dive right in.
So, what does overview of the company entail? The best way to get an overview is by meeting all executive members and one level below the executive team to understand what each of them does and also get their view about the company, including its history, size, and reputation in the market. You should also learn about the company's current strengths and weaknesses. You might get different views from different departments. You should focus on sales, marketing, and engineering departments to start with, as they have a more direct relationship with customers and products of the company. The next item, 2. Mission, vision, and values. Mission, vision, and values are crucial in understanding the company's culture and what drives it forward. Mission is a brief, clear, and concise statement that outlines the company's goals, aspirations, and the impact it aims to have on its stakeholders. Vision is a more aspirational statement that provides a sense of direction and purpose for the company and its employees. Values are the guiding principles that shape its culture, behavior, and decision making. These 3 things provide a framework for decision making, sets the tone for company's culture, and serves as a basis for establishing and maintaining the company's reputation. By aligning with the company's mission, vision, and values, the controller can better understand his or her role and purpose within the company and contribute to its success. Number 3. Key business lines, products, and services. It is very important for the controller to understand the business, including lines of businesses, products, and/or services, and how they contribute to the company's overall strategy and success. Once you understand this, the accounting part will just follow along easily. This will also enable you to be considered a value-added partner to the business. So spend as much time in the initial days to understand these items. You also need to learn about the target customers and market segments for each business line. Now on to the 4th and the last item under the first step. Organizational structure and key stakeholders. Understanding the company's organizational structure and key stakeholders is crucial in navigating the company and building effective relationships. The organizational structure includes its reporting lines, departments, and key personnel. This will enable you to understand the company's decision-making process, communication channels, and areas of responsibility. Entity organizational structure. This outlines what are the legal entities within the company and how the tax structure works. You should be able to get this from your legal team. Identifying the company stakeholders, including shareholders, employees, customers, suppliers, and regulators, is important in order to understand their needs and expectations and how they impact the company.
Financial goals and objectives. Understanding the company's revenue, profit, and cash flow targets is important in order to assess the company's strategic priorities and to align your own goals and objectives with those of the company. You also need to learn about the key financial metrics, and KPIs stands for key performance indicators, that are used to measure the company's performance, which is important in order to assess the company's financial performance relative to that of its peers and to identify areas for improvement. This will also allow you to make informed decisions and support the company's financial success. Financial reporting and regulatory compliance. This includes the preparation of financial statements, annual reports, and tax returns. This is pretty basic for a controller to manage as part of his day-to-day activities. You also need to manage key regulations and standards that impact the company's financial reporting and how the company complies with these requirements. These would include financial reporting standards. Understanding the financial reporting standards and guidelines that apply to the company would include understanding your generally accepted accounting principles, also known as GAAP, or the International Financial Reporting Standards, also known as IFRS, which is important in order to ensure compliance with accounting standards and to support the reliability of financial reporting. The other aspect would be the regulatory requirements. Understanding the regulatory requirements that apply to the company, including filing deadlines, reporting formats, and disclosure requirements, is important in order to ensure compliance with regulatory requirements to avoid fines and penalties. So by understanding the financial overview, you will be able to effectively manage the company's finances and ensure that the financial goals and objectives are met, and you also will ensure you comply with the relevant regulations and standards. Understanding the internal control framework. The controller is a key component of the internal control framework. Understanding of the internal control framework, including the processes and systems in place to ensure the accuracy and reliability of financial information, prevent fraud and errors, and protect the company's assets is obviously key. Here are the 5 main components of the internal control framework. 1. The control environment. This includes the tone at the top set by the senior management, the organization's values and culture, and the structure and responsibility of the organization's internal control system. 2. Risk assessment. This involves identifying and evaluating the risks that could negatively impact the organization's ability to achieve its goals and objectives. 3. Control activities. This includes the policies, procedures, and processes that are put in place to mitigate identified risks, such as segregation of duties, approvals, and authorizations. 4. Information and communication. This involves ensuring that relevant information is captured and communicated in a timely and accurate manner to support decision-making and control activities. And 5. Monitoring. This involves ongoing assessment of the internal control framework to ensure it remains effective and that any necessary changes are made in response to the changing circumstances. Accounting policies and procedures. Understanding the company's accounting policies and procedures is crucial in ensuring the accuracy and reliability of the financial information. You need to work on getting to know the overview of the company's accounting policies and procedures, including the processes for recording transactions, reconciling accounts, and preparing financial statements. 1. Purpose and importance. Understanding the purpose and importance of having consistent and effective accounting policies and procedures, including to ensure compliance with accounting standards, to support the reliability of financial reporting, and to minimize financial risks is key. 2. Accounting policies. Understanding the company's accounting policies, including policies for revenue recognition, accounts payable and receivable, inventory, and fixed assets is important in order to ensure compliance with accounting standards and to support the reliability of financial reporting. 3. Accounting procedures. Understanding the company's accounting procedures, including procedures for journal entries, reconciliations, and internal controls, is important in order to ensure timely and accurate financial reporting to minimize financial risks. Documentation. 4. Understanding the importance of documenting accounting principles and procedures, including the scope, responsibilities, and approval process is important in order to ensure the reliability of financial reporting, to promote accountability and transparency, and to ensure that all parties have access to the necessary information. Finally, review and update. Understanding the process for reviewing and updating accounting policies and procedures, including the frequency, methodology, and reporting parties, is important in order to ensure that accounting policies and procedures remain relevant and effective to identify areas for improvement. Finally, having a thorough understanding of accounting policies and procedures, including their purpose and importance, policies and procedures, documentation, and review and update procedures will allow you to make informed decisions, support the company's financial success, and ensure compliance with accounting standards. Let's move on to the third one. Identifying areas for improvement in financial processes and systems. When you take up a new role as a controller, your first task is to sit with each and every member of your team and ask them to walk you through the process that they follow. Not just give you a write-up, but actually sit with them and see how they are doing it. This will enable you to understand which areas are taking time and why. Are they doing the steps that make sense, or do you need to change it? Which ones you should automate, and so on. What sitting with your team also does is makes your team think that you are part of the solution rather than a boss who's just saying things without taking the time to understand what is actually going on. Other things to note are whether your team is doing things for the sake of doing it, or is it actually adding a value. This will help you identify areas for improvement in the financial processes and systems, including the identification of any inefficiencies or bottlenecks and areas where risks can be reduced. Here is how you can approach this task. 1. Assess current processes. The first step is to understand the current processes in place and identify any areas that need improvement. This can be done through a review of existing documentation, observation of current practices, and feedback from employees. 2. Identify areas for improvement. Based on the assessment, the controller can identify areas where processes are not efficient, effective, or meet the needs of the organization. This could include areas such as manual processes that could be automated, time-consuming processes that could be streamlined, or processes that lack proper controls. 3. Evaluate potential solutions. Once the area for improvement has been identified, the corporate controller should evaluate potential solutions. This could involve reviewing the best practices from other organizations, researching available technology solutions, or working with subject matter experts to develop custom solutions. 4. Develop implementation plans. For each area identified for improvement, the controller should develop an implementation plan that outlines the steps required to implement the solution, the resources needed, and the timeline for completion. 5. Implement and monitor. The corporate controller should work with the relevant departments and employees to implement the process improvements. After implementation, it is important to monitor the new processes to ensure they are functioning as intended and that the desired outcomes are being achieved. Finally, 6. Continuously evaluate. The controller should continuously evaluate the effectiveness of the processes and make any necessary adjustments. This will ensure that the processes remain relevant and effective over time and that the organization is able to continuously improve. So, what are some of the key aspects of financial operations that the controller should learn about? There are 4 of them. 1. Reviewing financial reports. Reviewing financial reports, including financial statements, management reports, and regulatory reports, is important in order to understand the company's financial performance. identify areas for improvement, and ensure compliance with accounting standards and regulatory requirements. 2. Analyzing the financial data. Analyzing the financial data, including trends, ratios, and key performance indicators, is important in order to gain insights into the company's financial performance, identify areas for improvement, and make informed decisions. 3. Understanding the budgeting and forecasting process. Understanding the budgeting and forecasting process, including the methodology assumptions and responsible parties, is important in order to support the development of accurate and relevant budgets and forecasts and to ensure that financial goals and objectives are aligned with business objectives. 4. Understanding cash flow management. Understanding the cash flow management, including the management of accounts receivables and payables, inventory, and fixed assets, is important in order to ensure the availability of sufficient cash to support the company's operations and to minimize financial risks. So, by understanding the financial operations and management, you will be able to effectively manage the day-to-day financial operations of the company, ensure the timely and accurate payment of bills and receipts of payments, optimize the use of cash, manage debt and foreign exchange risks, and analyze financial statements effectively. This will help you to maintain the financial health of the company and support its growth and success. Let us look at how we can review the accounting team under the following steps. 1. Assessing current processes. As outlined in step 3 above, it is important that you assess the current financial processes and systems in place, which is important in order to identify strengths and weaknesses and to determine the areas where additional resources or expertise may be required. 2. Evaluating staff capabilities. Evaluating the capabilities of your existing staff is important in order to determine their strengths and areas for improvement and to identify any skill gaps that may need to be fixed or filled. 3. Defining roles and responsibilities. Defining the roles and responsibilities of each member of the team is important in order to ensure that tasks are properly allocated and that everyone is clear on what they need to do. 4. Identifying skills and resources needed. Identifying the skills and resources needed to support the company's financial goals and objectives is important in order to ensure that the team is properly equipped to meet the company's needs and future demands. Evaluating workloads. Evaluating the workload of your team members is important in order to ensure that they are not overburdened and that they have the necessary resources and support to meet their responsibilities. 6. Assessing technology needs. Assessing the technology needs of your team is important in order to ensure that you have the tools and systems necessary to be productive and efficient. So, based on the steps done above, you should prepare a pre and a post accounting org chart, which outlines how things are right now and how you would like to change them going forward. This is a good starting point for discussion with your CFO on changes you would like to propose, if any, to your organization. By following these steps, a new corporate controller can determine the requirements of his or her team and make informed, confident decisions about staffing, resource allocation, and technology needed to support the company's financial success and growth. Congrats again, and good luck on your journey.